Hello, everyone. Good evening. Thanks for joining us live. Today we are going to be talking about these derivatives. Okay, so very often we have questions from our Facebook, Instagram, and also the community itself about how we regularly making at this kind of like 3 digit or even 4 digit ROI. Okay, so and our answer to them usually is we are using derivatives, right? So and most of the time they do not understand how does that work actually. Okay, so we also notice that many are very interested in this topic. So today myself and Lily will be sharing with you more about derivatives, and how you can turn a 10% profit to 100% profit with just one additional step, right? Okay, I hope that excites you because I'm already very excited to share as well. Okay, so my name is Leslie, Crypto Turtle, and I also have Lily with me tonight. All right. Yeah, Lily, want to
Hi,
say everyone?
hi,
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 okay.
everyone. Good evening.
Yeah, okay, yeah. So okay, Lily is actually known as the retiree trader who has helped many retiree who actually fear that they will outlive their saving, and has to be dependent on others. Yeah, so she actually teach this retiree how to trade and make additional income so that they are not afraid of what I just mentioned will happen to them. Right? Okay. Yeah. So great. I saw some of your live with us. Right. Okay, so can you give us, some reaction, so that we know that you are actually here with us? Maybe you can type in the chat BSI. Okay, BSI stand for Binance SG Investor Facebook Group, or just tap on the like button. Yeah, so we are know that we know that you are here with us, right? Okay, yeah. All right. Thank you very much. Okay, so the agenda for tonight, of course, derivatives. Okay, so divided into two parts. Okay, so the first part will be talking about futures contract. Okay, so I'll be talking about that. Okay, and the part two will actually be talking about options. Okay, and Lily will actually talk to you more about that. Right? Okay, yeah. So lastly, I also have a coin pick of the week. Okay, that we are in fact bullish about. Right, so maybe you may be able to apply to this coin after learning what is derivatives tonight, right? So stay till the end to find out if you want to know which coin that we pick. All right, so quick disclaimer first, right? So do note that whatever discussed tonight will be meant for educational purpose and general information only, right? Because in any investment, it is imperative that you also do your own research, do your own due diligence as well, right? So we also want to mention that we are not representative from this Binance or its subsidiary, right? Okay. All right. Okay. So derivative part one, future contract. Okay. So you can see actually this is a screen capture from our Instagram story. So if you want to see more, you can follow us. This is our handle. Right. So you can see that this the like 10x, 20x and all that. And because of that, we have been receiving messages. How we actually do it. Yeah. So therefore we decided to have a this live session tonight to talk about it. Okay, so we hope everyone watching will be able to learn something valuable tonight. Right? Okay, so first question, what is derivatives? Right? Okay, so a derivatives is actually a contract, okay, between two or more parties. Okay, and the value is actually based on an underlying financial asset. Example, cryptocurrency. Okay, Bitcoin, Ethereum, and all that. Right? So let me give you an example. All right, so imagine today, myself and Lily, we are just chatting, okay? And we were talking about, anything under the world, right? Okay, and then maybe we will talk about Bitcoins, okay? Maybe someone say, Bitcoin current price is at 40K, right? And then I'm bullish about Bitcoin. I told Lily, hey, I think it will go up, to 45,000, okay? That's why you see I'm green, okay? Because I'm bullish, okay? So I think Bitcoin will go up to 45,000. Okay, Lily disagree with me. She said, hey, Leslie, no, I don't think so. I think it will go down. Okay, because she's bearish, right? That's why she's red, lah. Okay, she's red. Okay, she said it will go down to 35,000. Then I told you, okay, since we have opposing, these views about the Bitcoin price, right? So, how about we make a bet? Okay, BET, bet, okay. So to have a bet, we set out a contract, a simple contract. Okay, then I say, okay, Lily, if Bitcoin goes up to 45,000, okay, that will be scenario number one. Okay, Lily, you have to pay me the difference in price. 45 minus 40. Right, she will pay me $5,000. Right, that's scenario number one. Okay, scenario number two. Okay, it goes down. right? Then I have to pay Lily 5,000 in profit. Okay, so you notice that this scenario, right? There's actually a this contract between the both of us, right? So makes sense, something like an agreement, right? And in this scenario, right, in either of these two scenarios, did we buy any bitcoins? No, right? So we only based on a contract and the underlying asset, which is Bitcoin in this case, to determine how we make a profit. Does that make sense? So it is a contract, and the value is based on the underlying assets. Okay, in this case, of course, Bitcoin. Okay, I hope that makes some sense. A very simple example of what is derivatives, right? Okay, so the next question is, where can I actually start trading derivatives? Okay, that sounds interesting. No, and can I just write a contract with my friend? To play this game. Of course, you can. Okay, but of course, I would say it's not recommended because it's not legally binded or things like that, right? You need to protect yourself. Okay, make sense, huh? So typically you can actually do it on the exchange itself. Okay, like this Binance, FTX, and this Kraken. Okay, so the next question is why? Why would I want to use derivatives? Why would I want a contract? I would, why not just buy Bitcoin? Right? If it goes up to 45,000, I still make 5,000. Why do I need to draw a contract? With Binance or with me with Lily in this case. Okay, so why, right? Okay, so the main reason why anyone would use derivatives is because it is a leverage instrument. Okay, so what does that mean? It also means that it can increase your, I would say, potentially increase your rewards, okay, your profit. All right, so how does that work? Example, okay, if you are using a leverage, right? Okay, so today if you make a $100 investment in a typical spot trading without leverage, if the price goes up by 10%, you make $100, you make a $10 profit. Okay, very straightforward, right? Okay, so but if you are using a 10x leverage, 10 times, okay, then a $10 profit will turn into $100. Okay, a 1,000 profit will turn into $10,000 profit. Okay, so why? Because simply is 10x, meaning to say a 10% profit would become 100% because it's multiplied by 10 times. Very, very simple. Right. So right now you could be thinking, hey, if it's so good, why isn't everyone using it? Okay. And it sounds, too good to be true. No, or I just invest 10x and that's it. Right. So of course there's there's a catch, or rather there's a pros and cons, right, in everything. Okay. So of course, to be fair, okay, your loss, okay, will also be multiplied. Yeah. Right. So a $10 loss will become a $100 loss. Okay, make sense, huh? So it's also multiplied. All right. So next, right, what I'll do is I will give you a walkthrough in binance.com itself, because I believe many people are actually using it. But maybe you have not explored these futures. Okay, so it's very simple, and at the same time, I will explain some of the points that I mentioned earlier on. All right. Okay. So let me switch my screen. Give me a second. All right, so typically when you go into Binance, this is what you see, very, very familiar, right? So instead of going to your usual trading, classic or advanced, whichever you are using on the spot trading, right? Okay, then you instead go to derivatives and go under USD and future. So once you click in, right, actually this is what you will see. Okay, if this is the first time you're coming in, right, then you actually need to take a quiz. Okay, so no worries, you can take the quiz as many times as you like, okay, until you pass, and it's not very, very difficult. Okay, so you should be able to pass it, right? And after you take the quiz, usually there will be a message to tell you that if you want to open up this future trading, okay, just say yes, right? And then this will pop up, and then you realize that, hey, actually it doesn't look very much different from the spot trading, right? Okay, it's just that there's a few other things that you need to take note of only. Okay, so typically one more thing you need to take note of, take note of is the leverage amount. Okay, for example, this is BTC, right? Bitcoin. Okay, so choose the perpetual one, perpetual one. So typically is against the USDT, the stable coin. Okay, as per your spot trading, right? Okay, so what you do is you key in, it has the usual limit, market order and all that, right? It's very, very similar. Okay, so the only thing you need to adjust is the leverage. Okay, so look what happened. You can actually go up to 120 times, okay, or 100 times. Okay, meaning you say if you make $1 profit in a normal spot trading, if you do this 100x, yeah, you do this 100x, you actually get $100. Okay, 100 times, okay. Again, you say, wow, so good, so I can 100x. Okay, but you must remember, your loss also 100x, right? So you see, this can be a double-edged sword. Okay, in a normal spot trading, okay, I would say it's very difficult to have a total loss of a position. Okay, what do I mean by that? It means that the position go to zero. Okay, very, very hard. Okay, why? Because it means that the whole thing collapse. Okay, no more Bitcoin. As example, you invest Bitcoin, how does your position go to zero? It has to be minus 100%. Okay, that means everything is gone. Okay, the market, whatever, crash already. Okay, so it's very hard. You can see like a 50%, 60% even. Okay, but 100% is, I would say, almost impossible unless the whole thing collapse. Okay, I hope you agree with that. Okay, but doing a leverage of 100 times, right? What does that mean? It means that if it drop by 1%, your whole position is gone. Okay, I hope that makes sense. So if you go 10x, for example, okay, and it goes down by 10%, your whole position is gone also. Okay, because 10 times 10 equal 100. Okay, so I hope that makes sense. So this is actually how you can start using future in Binance, right? So before you do that, right, you need to transfer some fund from your fiat and spot wallet, okay, your usual spot trading, to your M future first. Okay, typically the USDT, right? Okay, so when you close a position to take profit, what do you get back in return? USDT. Okay, yeah, but you don't own the Bitcoin, as an underlying asset. You only own the contract. Okay, I hope that makes sense. Right. So what is cross and isolated? So make sure you choose isolated as I would say, as a beginner. Okay, it means that if there's a liquidation, they only liquidate the isolated coin that you have chosen. Okay, for this case, in this case, it will be BTC, right? Okay, if you choose cross, they'll try to liquidate everything to protect your position. Okay, so let's say if you have Ethereum, you have Cardano, everything inside your future account. Okay, so while you're sleeping, whatever happened, your Bitcoin position is gone. Correct. So they'll take your Ethereum and try to protect your Bitcoin, and then your Ethereum, let's say a major crash happened. Right, so you may wake up with a shock. Okay, but if you choose isolated, they will only touch your Bitcoin if you are investing in the Bitcoin. Okay, I hope that makes some sense, right? Okay, yeah. So this simple walkthrough in the Binance Future, interface, right? So, yeah. Let me go back to my slide. Yeah, give me a second. All right. Okay. Yeah, so by the way, this is our referral code for the Binance future. So take note that the futures in Binance has a different referral link. Okay, so you may think, hey, Leslie, I already have a Binance.com, so I don't need your referral link. Okay, but when you open up the future contract, it actually has another link. Okay, but it's not mandatory to use. So if you choose not to use it, it's fine as well. If not, yeah, you can replay the video and just key this number in when the Binance future asks for a referral code. Okay, yeah. So again, but not mandatory to use, right? Okay, so in my opinion, future works best when you actually already have a proven strategy that you have been using, right? Okay, so it has been giving you like a consistent profit, consistent wins. Maybe out of 10 trades you can win 7, 8, 9, or even 10 trades. Okay, out of 10, for example. Okay, then I think that this works very good, very well for you, right? Because all you need to do is apply just one more steps. Okay, so using the leverage. Okay, but of course there are a lot of things to take note of when using future. Number one is your risk management, of course. Is this something that is it a risk that you're willing to take? Okay, so is it something that when you do, okay, you can still sleep at night? Okay, I will say that will actually measure how well your risk management is. Okay, so I hope that makes sense. Okay, so and also position sizing. Okay, are you going to put in your life savings, okay, into future? Then of course I think that won't make sense. Okay, so and if a position sizing, right, okay, in spot trading is still required. Okay, if you have not been doing so, okay, I hope that maybe you can Google a little bit what is position sizing. Okay, so but it's even more important when it comes to future contract. Okay, so if you are going to do 5x, so very simple, your usual position sizing you have to divide by 5. Okay, it's actually very simple. Okay, how you convert your spot trading position sizing to your future trading. Okay, it's not saying that, hey, I have 10x, I just put the same position sizing in hope that I'll earn even more. Okay, because your loss is also 5x, 10x. All right. Okay, so I hope that makes sense. Okay, so number 3 to take note is owning. Do you want to own crypto as an asset? Okay, because remember we say that this is a contract. You don't actually own the underlying asset, which is Bitcoin, Ethereum, whatever coin they're looking for. Okay, so maybe you are a true believer in this particular crypto. You want to hold it for long term. Okay, then using future, using derivatives will not work, does not work that way. Okay, because you are just buying a contract, okay, to make a profit. All right, so if you want the actual crypto, then you probably want to buy the actual crypto. All right, okay, I hope again that makes sense. Right, so a suggestion for beginners, you may be thinking, Leslie, what you say is pretty good, what 5x, 10x, even 100x I saw, on the binance.com interface. Okay, but you may be afraid, right? So I would say suggestion for beginners. Okay, beginners in terms of future, you may have been trading for few months, few years, but you have not used future before. Okay, this is the first time you're going to try using future, maybe after attending this live workshop, right? Okay, so why not just try out the 2x or 3x first? Because if you ask me, I'll say it's still pretty fantastic, right? Imagine you can regularly make a 20-30% kind of returns, ROI and all that, and then 2x, you get 40 to 60%. Okay, 3x from 20 becomes 60%. Still quite fantastic, right? If you ask me. Okay, and I'll say the risk, of course, considerably lower, if you are compared to using 10x and all that. All right, so I hope that makes sense. But again, of course, it still has risk, because 3x, you just need the price to drop by 33.3%, then your whole position is gone. Okay, and crypto is not uncommon, okay, to see a 30-40% drop as well. Okay, so you really need to know your risk management, your risk appetite and all that. All right, okay, so final key takeaway. A contract, okay, or rather derivatives, is actually a contract between two or more parties. Okay, so it's typically traded on an exchange, okay, like Binance, FTX and all that. Okay, the prices for derivatives derive from the underlying assets. Okay, for example, Bitcoins. Okay, and it's usually a leverage instrument which increases potential rewards and also risk. Because you multiply your rewards, you also multiply your risk. Okay, I hope that makes sense. And of course, some things to take note. I will say refer to the previous slide. All right, so you can replay this video again. Okay, yeah, with that, of course, as promised, we have a coin pick of the week. Okay, before I pass it to Lily for part 2, which is the option part, right? Okay, so of course, this is just a personal opinion. Again, another disclaimer, this is not a financial advice. Okay, please do your own due diligence as well. Right, so what is the coin that we are bullish about in the coming weeks is actually polka dots, right? So suggested entry is below $30. Okay, I'm not sure about the price right now, to be frank. Okay, so but this afternoon I checked, it was about 29 plus. Okay, so we think that this price is I would say a pretty good price. Okay, to get in. All right, so I hope you have learned something today, and with that I will pass the time to Lily, right, on the second part, options.
Thank you, Leslie. I mean, you've really explained derivatives really well. And on my part, I'm going to share on stock options as alternative to 10x your return versus stocks. Yeah. So I hope at this point everybody is keeping well. For myself, I'm a bit down today with a bit of bad runny nose. So if I were to sniffle this and that, or I sound a bit bad, so please pardon me. So I will try to deliver my slides and my presentation with you to you as well as I can. Yeah. So again, this is Lily here, and I'm really glad to meet you today. So for today, I am going to share on SPY as a form of, or rather as a stock for options purpose. Why I choose SPY is because SPY or S&P 500 is an ETF, and it comprises of 50 large and mid cap US stock. And some of the stock here is like Berkshire Hathaway, Apple, and Amazon, Facebook, Microsoft, Alphabet, there's Class A and Class C shares, JP Morgan and Nvidia, and the latest that was added to the top is Tesla, right? And what you can see here is if I look at the 5-year chart, right, for Apple, here you see it is uptrending as well as Microsoft, and for Amazon it is trending up as well, right? And FB as well. Sorry, is there anything? Okay, I hope you are hearing me, right? And this is a Google or Alphabet and Berkshire Hathaway. And you see that this SPY chart, right, is trending up. It is a combination of all the stock, the 500 stock, yeah. And generally, it is trending up. And although the stock may go up and come down, basically the high is getting higher, and the lows are higher as well. Okay, so that's why I want to use the stock to represent it for you, so that it's easier to understand. So let's say assume you have $2,000 as capital to start with, right? So you have two options. Okay, on January the 5th, when the stock is near the support line, SPY last traded, and with $2,000 you can only buy 5 shares and you pay 1.8K. However, as an option trader myself, I decided to buy a call with DTE of 136. This is date to expiry. I choose May 21st. Strike price is 371 because the last traded is, let's say, 371, right? 371.3. So I just take 371. And I pay a premium of 1910. Like what Leslie said earlier, right? An option contract is a contract. You don't own the stock. Whereas if you buy the 5 shares here, you actually own 5 shares. So when I buy the call option, I pay 1910. Now move forward to January 21st. That is about 16 days later, when the stock is near the resistance, meaning to say it has gone up, right? Because we say that SPY is always trending up. So if you decide to sell off your 5 stock to profit from it, your profit is only 64.55, which is actually 3.5%, which is not too bad. However, when I close off my buy call position by selling it off, I collect a premium of 2.6K because one contract in an option for option, right, is equals to 100 shares. So I multiply by 100. So my premium is 2.6 I collect, and then net of what I paid, my profit is actually 742. So you can see that the return is 38.8% compared to the stock is only 3.5, which is actually more than 10%. Now let's move forward. Again, let's say I profit from it and I go and do it again, right? Now I wait for the stock to retrace back on January the 29th. So the last traded is this amount, 370. So again, let's say I buy 5 stock, okay? And I pay 1.8 again. But if I buy a call again with DTE 140 days, now it's in June instead of May, okay, I would need to pay a premium of 2.2. So again, when I fast forward to about 11 days later, February the 11th, when the stock has trend up to near the resistance, I decide to sell off. Let's say if I have 5 stock, I sell off the 5 stock. My profit would be 133, which is about 7.2%. So for actually 11 days, 7.2% is not too bad. However, if you look at my buy call position, if I were to close it by selling off the position, I get 3.2K premium or a profit of 986, which is actually 43.3%. Can you see the power of options? So for stock wise, right, if I buy and sell, my profit for these 2 trades so far would be 197 versus for options, my profit is 1.7 already. It's really, really fast. You can see. Now, you may say that, hey, maybe that is lucky. Let's move forward and take a look. So May the 5th, the stock has retraced down again. And assuming I buy 5 stock, okay? So I paid 1.9. However, when I buy a call, DTE now is 133. I choose a July 16th. So I pay about 1.8K because, like I said, one contract is 100. So it's times 100. So fast forward again, 11 days to March 16, when the stock is near the resistance again, right? And I decided, let's say if I had the stock, 5 stock, I sell it out again. My profit is only 61.4, okay, or 3.2%. However, for my options, when I close it out, I collect a premium of 2.5, which my net profit would be 720, which is actually 38.5%. So you can see it is really, really powerful. So again, let's sum it out. For stock profit, it's only 259, okay, from the very beginning, whereas for options is 2448, which is actually more than 100% of what you initially started out. Let's imagine $2,000, right? That was the $2,000 when we started. So now move forward again, another one. This is kind of like the last I'm showing you, and I can see the exponential growth. So on March 24th, when the stock has retraced again, okay, and I buy 5 stock again because my profit so far from stock is only 259. So 259 plus the 2,000, I can't even afford to buy 6 stocks. Yeah, but for my core positions, right, I have enough money because I had actually profited 2.4. So at this price, strike price 387, my premium is 2088. So I can afford to actually enter 2 buy call options with expiry of 149, and I times 2, I pay a premium of 4.1. So imagine my profit was 2448 plus my 2000. Actually, I have 4.4K. So this is more than enough to cover, right? And fast forward to April 19th, last traded price, and if I were to sell off my 5 stock, my profit would be 138.45, which is actually 7.1%. Not too bad. But when I close off my call position, my profit for the 2 contracts that I sell off would be 704, which is 17%. So again, let's do a direct comparison. Yeah, my initial profit from my initial investment for the stock is actually 1.8, right? And my profit is only 397. Earlier 259 plus this is what, 397. My ROI from the initial investment, right? I invest this amount is only 21%. However, if you look at my options, right? When I take options, my initial investment was 1.9, and I grew it to this at a return of this 165%. So you can see that with just a tweak, instead of just owning the stock, of course, with options is a contract, you do not own any stock. Whereas for this, versus owning a stock, okay, but this return is way above what I can collect when I own the 5 stock. So you can really see the power options. Yep. And why, as I mentioned, I choose SPY is because SPY is a stock that is trending up. It's an ETF comprising of the strong stocks, right? The 500 stocks. Yeah. So that's why I choose SPY. Um, for this strategy. So I really hope you have really enjoyed my sharing. And if you want to invest, again, like I said, as Leslie shared earlier, right, this is just a sharing session and it is not meant to be any form of investment advice. So if you want to invest, please ensure you do your own due diligence and seek necessary advice before you proceed. Okay, and I thank you, and I hope I can see you in the next FB Live again. So I'll hand over to Leslie. Leslie.
Okay, thank you, Lily. Yes. So I hope everyone has benefited from today's sharing. Right. Okay. So if you feel that you have benefited, right? So maybe you can just give us some reaction again. Maybe just tap on the love button this time. Okay. So you know that you have enjoyed yourself. Okay, and please help us to share also if you think that is is something that your peers may also potentially benefit from it, right? Okay, yeah, so thank you everyone. So tonight is also the mid autumn festival, right? So it means that the moon is the
Yeah, yeah.
fullest, right, in the whole year, right? So okay, so in crypto usually we will say to the moon, right? So today will be a bit different, so I will say to the fullest moon, right? Okay, and trade safe and stay safe as well. So we will see you in the next Facebook live. Right? Okay. See you everyone. Good night. Bye
Happy
bye.
happy mid autumn, everyone. See you again. Bye.
Bye.